Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 27th day of January 2015, and this is the daily report for gold and silver. After some moderate to strong pressure in the precious metals markets, we have an absolute turnaround today with the precious metals trading up across the board, gold trading higher, currently trading roughly up $13 to $14 on the day, $12.95, $12.94, that's where we're ranging currently. We have had a low of $12.77.10 and a high of $12.97, $20 range on the day. Silver currently trading higher, up about 17 cents on the day. Current print on the screen is 1809. Now, according to Kitco, we've had a low of 1782 and a high of 1815. However, we're looking at a spot chart of gold. This is our daily chart, and if we look at the bottom on these crosshairs right here, we get a low of roughly 1752. The reason that's obviously important is we have a stop below 1762. I did get a report yesterday that a couple of our subscribers did get stopped out. I also got a couple of reports of subscribers that had their stops below this point, below, call it 57, and so they're still in. We will mark it out in a profit at this point. And then for those clients that are still long silver, if you can simply email me and I can get a sense or a feel for how many are still actively in the trade, I can work to push stops up along with gold as we move into the trading week itself. So as far as our silver position goes, as I said, I'm going to mark that out with a profit. But traders, even those that did get knocked out at 57, at 60 in that area, you got about $1 on that trade, 5,000 ounce contract. That's a $5,000 profit per contract. Not too shabby of a trade to start the new year off. If anything, I'm quite satisfied with it. For those that are still in the trade, we'll talk about ranges that we're looking for throughout the week. Let's take a look at what's been going on in the markets. Most importantly, we do have a stock market under tremendous pressure and the dollar under tremendous pressure. Here we're looking at the Standard & Poor's E-mini half-a-day chart. And there's absolutely no doubt, ever since we hit that top, we did find a little bit of support in the equities markets. That came in roughly at, call it 1985. That's this 38% retracement level, and it is, of course, a retracement level from this move here. The question is, this is our 23% at 1225. Market is currently trading above that. You can see the low that it hit and how much it has come off of that low. So we do have the stock market under pressure, but really the big news today has been the dollar. And traders, we're looking at our dollar chart right now, and there's absolutely no doubt. You can see some real pressure, some pressure that we really haven't seen defined in this market in quite some time. You get a little bit of that right here and a little bit of that right here. And really, to genuinely show this to you, let's go ahead and kind of uncompress these candles. Reason I compress them is I get a better sense or a feel, but if I'm looking for the kinds of retracements that we've seen, we definitely have to put these candles back. So if we take a look at this basically linear rise in the market in the dollar index, market shoots up, hits at about 87, corrects, comes back up, small correction right here, and then we're all the way up here, and now we've had the sizable correction off of these record tops that we've gotten. And these are what, in terms of historical precedents, we really haven't seen this type of pricing for quite some time. We really have to go ahead and then compress the chart to see that we haven't seen it for about, call it almost 10 years, really since 2004 when it has been in this area. So we've got a 10-year high that we're working on with the dollar. And so gold really, really took off. We know what gold looks like when it's swimming upstream, so to speak. And that is that as the dollar has been dramatically rising higher, this of course is back in November of last year. We had the dollar just tremendously running, and we had gold running. So now we've got the dollar coming off of those highs, at least momentarily, and we've got the net effect, of course, of gold moving up back on that $1,300 mark. So traders, as you recall from yesterday's show, we were looking at various areas that we could possibly peg as support in the market. We looked at a couple of different fib retracements, this one being our primary one, where we're drawing from 1390 down to 1230. There is another one that can be made also by moving this upper level line here down to this top, which is 1346. And when we do that, we're looking for, this is our stop. Let me just kind of move that out of the way for right now. But 1294, 1295, this is an area that we'll need to move back over. You can see this is our current level of resistance, 1294. And we then get another area of resistance right up here on this top, which is around 1320. So my sense is that if this area holds, we continue to see some upward momentum in gold. We want to see some effective closes above 1294, 1295. We're just hovering in that area right now with about an hour to go. We then need to see it break and close above 1300. That, of course, is going to be psychological resistance, and you can see that's all in this same area. And then the next top we really would want to see if it can take out is this top here at 1320. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update review. Bye-bye.